Hey guys, Mike here. So big day in the market today, anywhere from 2.7% to 3.5% on the indexes. The stocks are up much bigger than that. And I'm gonna show you two really big reasons why this is actually happening. And the one thing I told you yesterday, and I've said it multiple times. Remember, we're in earnings seasons and the earnings have been, the bar is set so low, you can't even see it. It's in the ground now, okay? I mean, these guys guided down the first quarter, these companies did, and you see Netflix today, right? They just reported, I'll show you a little bit of it, but they said they were going to lose 2 million subscribers, right? They were just trying to go ahead and let's just take the hit now, even if they didn't believe that or not, whether they were going to lose 2 million subscribers. That's a lot of subscribers, right? And so, of course, what happens, they end up reporting earnings, and you can see it's up big after hours, very volatile right now. And as far as I'm concerned, the earnings were just dismal, for God's sakes. But it's so funny because they come out, and I read this off my phone, they only lost 970,000 customers. Way to go, Big Daddy. And then their guidance for Q3 is the revenue is going to be 7.87 billion versus 8.08 billion expected, guiding down the earnings per share as well to 214 versus $2.71. As soon as that hit, the stock went up even more. All right, and so we'll see where it opens up tomorrow. But like I said, these companies do not even have to meet earnings. You saw the bank's profits, right? All of them were just, most of them were just terrible, but they all went up. Didn't matter, right? And I mean, Citigroup had a great earnings, as somebody pointed out, which is true. They went up. They deserved to go up. The rest of them, though, should have been down. Nope, rocketing up. Like everything's moving up, right? I don't care if it's crypto. Doesn't matter what's going on. Risk on, risk on. And I think there's a couple things happening here. One, you got, probably a lot of people that are short the market that are getting trapped now, and they're having to cover, right? They realize, we got to cover. And why are they probably doing this right now? Because they're looking at these charts. Look at the QQQ. What happened? Bullish things happened. One, it claimed its 50-day moving average. It got above that. It's filling this gap right here, and I'll show you a little bit more on that one. You got this trend line now where it's making higher highs, higher lows right here. And so that right there is going on. And if you scroll back, you can see the 100 days right above it, and that looks really far away, but it's not. And you can see what happened last time in the March rally, right? We got up there, rejected off the 100-day not once but twice, and then started selling off. And so this gap right here, if you look at this as the minute chart, and I love gap fills, it literally filled this gap to the penny, and then started trading sideways and bouncing off of it, but did not break through it, as far as I know, as I'm recording this video. And if you look at the SPY, you can see the same thing, right? It's actually right up against the 50. It moved above it around 330, I believe it is, but it's going to try to close above that. You got a gap right above it right there, which it can go to. And the 100-day is not that far away. That 100-day moving average, I mean, if we measure this out, you're sitting here, you're looking at only around another 2% to get to the 100-day, right? And then the Russell over 3.5% today. You can see what's happening. It's right there at the 50, trying to fill this gap right here. And then, of course, there's another gap right above that. And so you're seeing some big moves on the small caps. Of course, everything's moving, so it's not like it's specific to the Russell or anything else. Now, one thing to keep in mind, why is this happening? Why is tech and ARKK, which I showed you, all of a sudden started basing out, building support? And it's simple, because funds started flowing out of energy ETFs. You go down to the financials, what happened? They've been getting killed. Funds started flowing out of the financial ETFs. So guess what? That money's going to go somewhere. And where did it start flowing into? Tech. QQQ, ARKK, XLK, IYW, all of these right here started having more inflows than outflows all of a sudden. And by the way, if you get anything out of this, please hit that like and subscribe button for me. I really appreciate it. Think about sharing the video. As always, guys, thank you for all your support. Now, of course, the popular opinion on the street is, this is just a bear market rally. It's a tradable rally, or, something like that. And it really, until you get, especially above the 100 at this point in time, since I don't think we've been above the 100 on the QQQ since 2022 hit, or since this bear market started. So, which is, we're not that far away, right? And, until you get there, we'll have to see. That's just the way it is. But yeah, there's no doubt you have shorts covering. I'll guarantee you a lot of people were buying Netflix puts, and they lost all that. You can bet money on that. So, that's kind of where we're at on that. But you see Netflix, as I was talking about, guide down. You know, again, we'll see when they open up tomorrow. Sometimes you see these big moves in after hours, and then they kind of fizzle in the morning, but on some news or something. But understand, you know, you're going to have Tesla reporting, other companies are going to be reporting, and I'm just saying, don't be surprised if you see these companies miss earnings, guide down, and trade up higher. Don't be surprised. It's just one of those things that, because macro-wise, nothing's changed, right? And so, but it doesn't have to, because the market likes to say it's forward thinking. And I told you there's this big bets, and you hear it all the time. Every day I've heard this now. You know, the Fed will pivot in September, October, November, somewhere in there, they're going to pivot. And so, because inflation is peaked, and we'll see. You know, I've been hearing that for a while. It's a gamble, and if they're wrong, guess what? They're not gambling with their own money, they're gambling with your money. So, it doesn't really matter to them. Either way, they're getting paid. And so, you know, that's one thing. But the other thing to look out for, and you're seeing this a lot, and this is where it's going to really affect earnings for these mega cap stocks, which I talked to you about. You see, IBM, they actually beat on their quarterly revenue estimates, but they warned in their guidance of a $3.5 billion Forex hit because over half their revenue comes from overseas, and with a strong dollar, you know, they're going to take a hit right on that right there. And so that's what we talked about, all these big companies like Google and Apple. And then you saw it not just in tech. I mean, we're talking about in healthcare as well. Listen to, this is Johnson & Johnson's CFO in their earnings, which of course they beat their earnings, no problem, but they guided down some because of the same issue.
What happened here? Why are you lowering guidance?
Yeah, you know what I think, Becky, is it's all the strengthening U.S. dollar, right? So our operational guidance, which is really what we control, remains exactly the same as we had in January and then again in April. It's the strengthening dollar. So last week when we did our estimates and finalized our guidance, the euro and the dollar were pretty much at parity, something we haven't seen in 20 years at really an accelerated rate that we've only seen 2 or 3 times over that 20-year span. So it's all FX at this point, but our operational guidance, how we measure our performance, remains intact.
And so just imagine if the dollar continues to strengthen, what's going to happen to earnings versus the flip side of that, what happens if the dollar actually does weaken, which I think a lot of people are betting on, you know, just like oil did, right? Nobody thought oil would come back down like this, and it has. And now what about the dollar, right? And so if it starts to come back down, then that's going to help these companies' earnings. And I think a lot of people are actually betting on that. But, you know, who knows? It's one of those factors, again, that is out of our control. But we, as I saw you in these charts, the manipulation is unbelievable. So whatever the hedge funds want to happen, that's what's going to happen. And so we'll have to see on that. But, you know, this is a year of firsts. Let's be real about that. I mean, this is a different bear market than we've ever been in. And could this be the first bear market that ends without, you know, less than 10% of the S&P 500 stocks being below their 200-day moving average? Could be. Could this be the first bear market that ends without us hitting 45 on the VIX or above? Could be, right? And so we're going to have to see, because there's been a lot of firsts so far this year. And so we shall see. So I hope you got something out of it. Hit the like, subscribe button if you did. Let me know what you're doing down in the comments and what you got out of that. And I'll see you guys later.